Welcome to the fourth event of the Oxford Economic Society this term. I'm Oliver, the events director this term, and we're honoured to welcome Martin Wolf. Mr. Wolf joined the Financial Times in 1987 and has been associate editor since 1990 and chief economics commentator since 1996. He's widely regarded as one of the most influential economics journalists worldwide and was awarded the CBE in 2000 for his services to financial journalism. Today's event will have a slightly different format to usual. We will begin with a Q&A section, lasting roughly 50 minutes, and then we'll leave 10 minutes at the end for all your questions. You can send any questions you have through our Pigeonhole page, which should be on the Facebook page now. And if you would like to rewatch any events, we'll post all events to our YouTube page immediately after the event. Thank you again for joining, Mr. Wolf. I thought we'd start off by drawing on a recent piece you wrote about the need for the US to cooperate and compete with China rather than pursuing a Soviet-style policy of containment. To me, there seems to be two contrasting arguments about the direction of US-China relations. On one hand, there's this line of argument that suggests the hardening of relations between US and China is a Trumpian phenomenon. It was only 5 years ago that Osborne was heralding a golden age of relations between China and the West, and Obama was negotiating a trans-Pacific trade deal between the US and China. While on the other hand, there are some quite fundamental differences between the West and China, particularly over human rights and China's increasing military presence in Asia. So what do you see, so to what extent do you see the hardening of relations between the US and China as being more of this short-term Trumpian phenomena, or do you see it as a long-term geopolitical shift?
So first of all, it's a great pleasure to be with you today, and I look forward to our discussion. As I think I mentioned, I'm not saying this was the same one, but back in '68, I founded an Oxford Economic Society. It didn't exist then, and it's possible it's the same society and has continued to exist, in which case that's wonderful. And I enjoyed very much being part of it then, and I think it's a wonderful opportunity. So the question you raise is very significant, but I'm going to make one not insignificant correction of what you said. The Trans-Pacific Partnership was actually designed to exclude China. It was an idea of the Obama administration in what it called its pivot to Asia, which was quite clearly an attempt to balance China in the Asian region, to contain it, if you like. And it was an attempt to put together a very deep trade relationship with the countries that wish to be independent to some significant degree of China. So it included Japan and South Korea. It included Australia and New Zealand. It included Vietnam, and if I remember correctly, most of, I'm not sure of all of ASEAN. So it was actually an attempt to contain China. And Trump, one of the first things he did was pull out of it. The Trans-Pacific Partnership survived without the United States. It was renamed. I don't need to go into that. And it still exists, but of course, without the United States, it isn't what it was. I think that's important because I think it's fair to say that the United States, sort of as the Western hegemon and creator of the post-war world system, liberal system, the system of which we are part, became suspicious, increasingly concerned about China's rise, the direction it was going in, already with the arrival of Xi Jinping, and to some extent even earlier. And President Obama, though he certainly wasn't anything like Donald Trump, was already showing this doubt about where China was going to go and a desire to create a liberal system of deeply integrated powers which were going to go further towards free trade than China ever would. And that's important because I think already back in the Cameron-Osborne government, if we can call it that, the British position was a little bit idiosyncratic, though some of the Europeans, the Germans, for example, had a similar view. So the Europeans were more friendly towards China, less concerned about strategic rivalry, they were less invested in Asian security, and in any case, less invested in security questions more broadly. And I think what's happened since then is Donald Trump sort of went overboard on this. He went overboard on it in a very idiosyncratic manner, very unilateralist, not trying to bring the allies together, on the contrary, attacking them at the same time, and focusing predominantly himself on the bilateral trade relationship, bilateral trade balances, which is probably the least important part of the relationship. Though other people in his administration with deeper intellects and more coherent policies, particularly his trade representative, Robert or Bob Lighthizer, had broader concerns. And this then got wrapped into a whole set of strategic issues, security issues, technology issues, investment issues, both within America and in China, a whole slew of complex issues. And Trump sort of canalized this, or maybe catalyzed, that would be a better word. And I think that more or less, without the Trumpian obsessions with bilateral trade, are likely to carry over into the Biden administration. So the US policy, I think, has been more consistent through Obama, Trump, and now to Biden than people might realize, with this crucial exception that Obama and Biden understood the need for alliances, both with Europe and allies in East Asia, and Trump never understood what an ally was for. The British position, as in many respects in the last 10 years, has been rather idiosyncratic. So first, we were wildly enthusiastic for being the bridge of China into the West, and particularly the financial sector, but more broadly. Then, of course, we went into our own spate of nationalism, or whatever you want to call it, the Brexit campaign, and post-Brexit, when we stopped thinking about this altogether. Now we've come out of that, and it's pretty clear our current government pretty well inevitably feels that it has to go along with the Americans. And I think to some extent that fits in with the temper of the government backing in Parliament, where there's increasing concern about human rights issues and so forth. So I think the British have, as it were, rejoined the Americans in their skepticism about China. That leaves the Europeans the friendliest towards China, the EU, but even that I think is going to shift. So for the future, it seems to me pretty clear the relationship is going to be one of skepticism, with a strong sense of competition, with a big concern about strategic questions of which trade will be a part. But exactly what that policy is going to be, how it's going to evolve, how well it will work, I think that's all still to play for.
To what extent do you think the US and the UK and Europe, or sort of or the West as a whole, can use sanctions or economic policies to sort of put pressure on China to do with their human rights abuses in Xinjiang currently? Do you think there is real scope for the West to sort of force change upon China, or do you think sort of China's own internal security is so strong that there's sort of limited amount that the West can do to try and impact change?
My own guess is that there is absolutely nothing that the West can plausibly do that will influence China, at least if it takes the form of overt pressure. I mean, there's a long history of the use of sanctions as an instrument of foreign policy, very long history. And it's at least pretty clear to me that they really only work if the country one is sanctioning is itself split on the policy in question. So there are really important opponents domestically of the policy in question, that it really wants to be, as it were, looked on with favor by the West, and the country concerned, or at least the people concerned with making the necessary concessions or the desired concessions, feel that they are appropriate ones, bearable ones. So the most successful sanctions regime in my lifetime, I think pretty clearly, was the one against South Africa over apartheid, which was initially, of course, essentially voluntary private activity that governments got involved in. And that was because in South Africa, all those conditions actually apply. There was, to put it mildly, massive domestic opposition to apartheid. There was a split in the regime. There was a strong desire of white South Africa to be part of the West. All this gave them tremendous pressure. More recently, this is relevant to this, we've imposed, or the Americans have imposed, what they call maximum sanctions on Iran. They have done immense damage to the Iranian economy, and it has had absolutely no effect on the regime whatsoever. It's toughened it, and it is, of course, and this is crucial in these situations, made domestic opponents of the regime look like traitors in the eyes of their own people, because these domestic opponents are essentially welcoming what is certainly a hostile act by foreign powers against ordinary Iranians. So my general view, and similarly with Russian sanctions, my general view is that sanctions don't work very well normally. There are conditions in which they work, but there is no country against which they're going to work worse than against China. First of all, it's an enormous trading power which is able to trade with much of the world, which will continue to trade with it. There are very important Western countries that trade more with China, or as much with China as they do with America. Australia is far more dependent on China than it is on America. Japan and Korea both do enormous amounts of trade with China. They will be enormously damaged if they were asked to do this. And to be blunt, they're somewhat frightened of China, quite understandably. And above all, even beyond the capacity of China to manage this economically, the Chinese are intensely nationalistic. They are a superpower. They believe they have overcome or are overcoming what they call a century of humiliation, in which they were forced to accept all sorts of interference by foreign powers in their domestic arrangements, which is correct. They were. And they will regard, or at least the government, which certainly controls China for the moment, regard what they do in Xinjiang or Tibet or even vis-a-vis Taiwan as their own business and nothing to do with the Western powers. So they will never, in my judgment, and I felt the same about some of the trade policies, surrender over this. So we can certainly make the gesture. It will do some economic damage to China and quite a bit of economic damage to ourselves. But I think the chances we will change Chinese policy in this way are very small. If I look back on my life, one of the most successful foreign policies in dealing with a superpower, which I did not understand at the time, so it's a change in my mind, was in the 70s, when the Americans, under the influence of Henry Kissinger, introduced détente. And there was an increasing rapprochement with the Soviet Union. Actually, that weakened the regime. It made it more difficult for them to argue that they're in this colossal existential war against a hostile West. It made it easier for someone like Gorbachev to open up, because it's what the Russian people and even more what the Eastern Europeans wanted. So I basically don't think a policy of hostility towards China for these reasons, that is to change their domestic behavior, is going to do anything whatsoever that is worth while. It'll be a waste of time. It's a gesture.
Just to finish this sort of section on the Biden administration, what do you see as the goals in terms of the Biden administration economically, sort of using US economic power to influence geopolitical affairs? And sort of as a sort of side point to that, what do you think they can actually achieve? I guess there's a difference between what Biden wants to achieve and what he actually can achieve. How do you see the distinction lying?
I think this may be the wrong way of looking at it. I think this is an administration, which is going to be overwhelmingly focused on the domestic front. They Many of the people who participate in it have a very strong focus on the need for healing the United States itself, not just economically, but also socially and politically, improving the lives of working people, reducing inequality, improving people's security, notably with health policy reform, obviously getting out of the pandemic and minimizing the costs of the pandemic. So this is an administration which will view the world through a domestic lens. Is what we are, they are not in the comfortable position of, let's say, 30 years ago in the Clinton period, 28 years ago, the Clinton period, when things seemed good at home and they could play a big role, for example, in completing the Uruguay round, doing NAFTA, opening to trade, negotiating the World Trade Organization accession of China, all that was done under the Clinton administration. That's not the way they will view the world. They think that the United States is, as it were, on fire, which in some sense it pretty clearly is. There's a tremendous instability in the United States, which they have to deal with. And it's in that context they will look at trade, foreign relations, everything else. There is, then when they look at the world, it's pretty clear now that Biden has, his priority is to strengthen democracy. He's been talking and people around him about an alliance of democracies. How far that will go, we don't know. But that reflects, I think, a real feeling that democracy is on the back foot. Obviously, he would never use that metaphor, given that he's American, but never mind. It's on the back foot that there are important autocracies that are hostile, above all China and Russia, but also others which are in question. And he's keen on supporting democracies, creating an alliance of democracies, which will be particularly with Europe, including obviously the UK, which is, I suppose, still a European country, and its East Asian and Southeast Asian allies. And he will want to strengthen trade among them. I think it's conceivable that he will try and recreate the Trans-Pacific Partnership, though with different conditions from the ones under Obama. He's clearly going to be more hostile to China across a wide range of activities. But it's pretty clear that large-scale trade liberalization is not his objective, because it's very unpopular now in the United States. But I would stress the key point is this is a domestically focused administration for which the world is, as it were, not so much an afterthought, though it is partly, but what they want to do in the world will be governed very significantly by what they think is going to help Americans, and particularly ordinary Americans.
So staying on the topic of the United States more generally, but more looking at the stock market, it's obviously over the course of the pandemic, what we've seen is stocks in the United States sort of skyrocket in price. You might look at Tesla or some of the tech stocks. Do you think, for the US, I guess probably is more applicable than the UK. However, do you think there is currently a stock market bubble?
It's always, as Alan Greenspan always used to say, much easier to know whether something's a bubble after it's burst. And certainly in my case, if I look back on my life, I've tended to see more bubbles than there were, or at least they turned out to be more reasonable and less excessive than I thought. But sometimes they are bubbles, genuine bubbles. The most obvious one, which I and some others called correctly, was the late 1990s so-called tech bubble, which most of us did think was a bubble, because many of the companies that were being highly valued had no profits and even no business model, and it was difficult to believe that they were going to be a success. So that looked like a bubble. So the question now is, is this true now? And here, I think very broadly, you can make 3 points. First, on sort of classic historic valuation metrics in terms of the stock market itself, of which probably the most famous is the cyclically adjusted price earnings ratio for the stock market as a whole, a measure which was developed by Robert Shiller of Yale, who's of course a Nobel Prize winning economist and is, I think, an absolutely brilliant economist. I've known him for many decades. So if you look at that measure, the stock market in the US is as highly, there are only 2 periods in the last 120 years when it's been decisively more highly valued, in 1929, late 1920s, and 1999. So that's pretty worrying, isn't it? That would suggest it's a bubble and unsustainable. And it would certainly suggest the chances are that returns on stocks over the next 10 years in the US market will be very low. That's the normal, it's not a forecast of the price, but it's a forecast of future returns. And I think that's probably plausible because at these prices, even if the market stays here, the returns are going to be relatively low because earnings are so highly valued. There are 2 obvious counters to this. The first is, well, stock prices are very high, but so are bond prices. In fact, or if you like, bond yields are incredibly low. So real interest rates on safe government bonds are basically negative, out for very long time horizons, very long maturities. It's true for the UK dramatically, but also for the US. And nominal interest rates are very low. So I just looking yesterday, I think, and even though there's been a jump, the 10-year bond yield in America is 0.9%. And that would imply, if they hit their inflation target, a minus 1% real. So if you look at the stock market in terms of the so-called equity risk premium, which is the gap between the return on safe assets, which I've said is negative real, and the return on stocks as indicated by the price earnings ratio cyclically adjusted, it doesn't look so unreasonable because in other words, the alternative asset you might hold for long periods also has unbelievably low returns. And the final thing that is important is that the companies that, as you mentioned, are highly valued are predominantly tech-driven stocks. Now, some of them are quite questionable, Tesla most obviously, but many of these companies, Amazon, Google, Facebook, Apple, Microsoft, are pretty near to being global monopolies. They have enormous profits. And one might well be optimistic and think they got huge potential for further growth. So it doesn't look like an insane bubble. Now, when you balance this out, lengthy answer, my answer will be, these are very high valuations. If the underlying conditions in terms of real interest rates were to change, and they might, or in terms of the world economy and global economic integration on which these companies depend, that was going to go south. You're going to get a lot of disruption in the world economy, which won't allow these companies to operate globally and make profits globally. Then the stock market could correct quite violently and quite significantly. But they don't look insanely overvalued, given the 2 conditions I've mentioned about real interest rates and the underlying profits of the business is concerned. And so what you have to analyze is, will those conditions change? And the point about those 2 conditions, real interest rates and the profitability of the leading tech companies and some other leading American companies, is that they have been building over a long period. I mean, we've had declining real interest rates for about 20 years. We're now at incredibly low, but it's not obvious that this will change. So the answer in the end is possibly a bubble, not absolutely certain, but clearly if you buy stocks at these levels, you have to assume that future returns are going to be pretty modest and possibly negative.
Okay, thank you. That's very interesting. Obviously, you just mentioned Apple there and talking about these sort of big tech firms as global monopolies. So I'm quite interested to hear what your thoughts might be on, obviously, it's quite a big thing in the Democratic primaries, but about the potential so-called breakup of big tech. So, thinking about Facebook and the like as monopolies, and whether, I suppose, will the Democrats, now they sort of have a majority in Congress, act upon this sort of goal within certain areas of the party to break up big tech? What do you think this breakup might look like, and what your thoughts on doing so would be?
Well, these are really fascinating questions. I suppose Apple really isn't a monopoly except of Apple, but it has competitors in all its lines of business. It's just that it has such extraordinary pricing power. It makes it, which is a form of monopoly, because it has made the brand so valuable. There are other businesses that you list that look much more like real monopolies. The most obvious, Facebook in the social media area, and Google in search. They're overwhelmingly dominant globally in outside China. Crucial point, a very important point in their areas. Microsoft obviously continues to have very powerful monopolies in certain areas. Amazon isn't really a monopoly, but it's a hell of a competitor. Anyway, so they're all different. That's important. That's the point I was trying to make. Then your question is, well, what are they going to do about it? They clearly can. My guess is they're not going to do much. That's my guess, because taking on these businesses is going to be a tremendous political battle. And they've got so many other things they want to do. They've got a very limited majority position in Congress, and particularly in the Senate. So I'm just not sure how much effort they're going to put into attacking them. Broadly speaking, there are two ways they can go about it if they decide to, and I don't think they've decided. The breakup and the regulation models, that's the alternative. There are some of these businesses, so let's take Facebook and Google. They have a core, they're different, as I say. This is very important. They'd have to approach these businesses differently. They're not going to be treated as one. They can't be. They're really different businesses. Facebook and Google have a dominant core business. In Facebook's case, it's Facebook, the social media, the social platform. And in Google, it's search. You can't break those up. They're a single business. I don't know how you'd break it up. I may lack imagination. So what you try and do there is to separate off from Google and Facebook ancillary businesses like Instagram or WhatsApp, which they, in case of Facebook. Google also has a number of other businesses, Android, the mobile phone business, and of course they're into lots of other stuff. They could say you've got to divest yourself of those businesses, these ancillary businesses. That wouldn't undermine the monopoly that they have at the core. And the difficulty with that is, I think it would have been a good idea to have prevented the takeovers that Facebook did. The difficulty with that is it doesn't affect the core monopoly, because it'll still be there, and which many people are concerned about, particularly with Facebook. And it's not clear how successful these businesses will be on their own. But the most obvious one to break up, I would have thought, will be Facebook, because those other businesses clearly could operate on their own. And I think there was a very strong, good case, this is the point I'm leading to, for saying that if a company is this dominant, it shouldn't be allowed to take over businesses that might be competitors of it in future. The argument against that, by the way, is, well, that will reduce the number of businesses people will start in Silicon Valley or elsewhere, because they hope to sell to Google or Facebook. DeepMind is another obvious question. You know, they took over DeepMind, an absolutely extraordinary British company. That gives them a dominant position in AI. Do we want them to should that be forced to divest? Well, it was a free sale, and DeepMind has prospered under Google. So there are some very difficult questions about undoing those businesses, those takeovers. But that's one thing you could imagine happening. Apple, there's no way you can break it up. I don't see what you could do. I mean, you destroy the business. That would be crazy for the Americans to contemplate. Microsoft, well, what you could do is perhaps separate out cloud services, and Amazon will be the same. Amazon and Microsoft are dominant cloud services businesses. They're not directly related to the other business. You could separate those out. Again, there'll be a lot of, you know, why people will say they're not monopolists in cloud services. They have lots of competition. Anyway, the point I'm making is once you start thinking of breaking these businesses up, it gets very quickly very complicated and very firm specific. It can be done. I lived in America when AT&T was broken up. That was a decisive thing, but these are massive battles. Maybe it will happen, my guess, not. The alternative, obviously, is to regulate them. Force them to reveal their algorithms, force them to get public approval for algorithms, which basically determine which businesses prosper. The Google rankings are decisive for business futures and so forth. But regulating them is a nightmare because every country in the world has its own view of how they should be regulated because it depends on their domestic politics, and they operate in all their markets. Facebook and Google are everywhere in the world outside China. So this is a lengthiest disquisition, but the more I've thought about it, the more difficult this gets. And if I were to predict, my guess is they won't do that much. I think they probably should have done so. And there are some huge questions which I haven't even covered about the way some of these companies operate, Facebook most obviously in politics. But I think it's going to be very, very difficult to get the time and the energy to reach an agreed policy in Congress and legislation which can be passed and enacted and work.
Well, just, I think that came up to me just then was sort of the idea that these companies are all massive global behemoths. Like Facebook is a real global company. We're talking about how US Congress is going to legislate. How do you think that, like, the fact that Facebook isn't just solely a US company and obviously is accountable to governments worldwide will influence future policy? And do you see increased divergence between, for example, how the EU operates competition policy in terms of big tech compared to how US Congress regulate its own sort of tech companies?
Yes, in fact, that's already happened, as I'm sure you know. The EU legislation, notably on privacy, for example, is very powerful. It exists, and if they operate in EU markets, including us before we left the EU, we had to, all our businesses, including these businesses, had to obey EU law on privacy. So we already are moving into a fractured environment, regulatory environment. Another area was EU, I think it was law, might have been legal cases, which under certain circumstances compels Google to forget people, as it were, to remove pages. Again, that applies in the EU. It doesn't apply worldwide. Now, the reality, obviously, is, and we've actually been talking about this with the UK competition regulator, that these companies are likely to adjust their business models to a far greater extent when the market in question is really big. You know, so if you're a tiny little country like, say, Iceland, they're not going to bother very much, and if they lose the market as a result, they'll probably live with it. But Obviously, the EU market, the US market, self-evidently, since that's where they operate and that's where they live. The heads of the founders and heads of these companies, but also the EU market. I think the Indian market over time, other big countries are going to have a lot of influence. And of course, they will do whatever they can, and they can do a fair amount because they know where people are based, more or less, to abide by whatever the domestic regulations are, which are evolving all over the world in somewhat different directions, which clearly they don't like. But I think the reality is we're moving into a world of multiple different jurisdictions, but some obviously count for much more than others. And it's obviously an interesting question how far the UK will be big enough to affect how these entities behave, how that will work over a whole range of issues within the UK, and so forth. But when it gets to fundamental questions about the structure of the firm, such as the ones we talked about, which is, what these companies are allowed to own, then it seems to be pretty clear that that is going to work basically in places where they're incorporated and where these other businesses were bought and then wrapped into the core business, and that's basically the United States. There are exceptions, obviously, as I mentioned. DeepMind was a British company, but I don't think the British competition authorities or government will be very inclined to tell the Americans that they have to divest a business they bought in good faith, reversing an agreed takeover of quite a few years ago. I think that will be something the British government will be very unwilling to try on vis-a-vis the Americans, and I don't know how it would operate in law. But the EU is big enough to do so. The market is enormous, and they could well take it on. So the basic outcome is going to be a mess, and we're going to see how it works. But the US authorities will be the most important. And one final point, which I think is a different one, we face very similar issues with the banking industry, and which is another huge global industry. And of course, it had a huge crisis in 2007 to 9. And there's been global regulation of banking since the 80s, and that was tightened after the financial crisis in the Basel Agreement, as it's called, because that's where the Bank for International Settlements is, and that's where all these regulations are sort of formulated. There was a really big effort to create global regulation in banking because it was perceived that it creates global crises. I think it would be much better if you want global regulation of the tech giants, but in practice, I suspect it won't be possible.
Yeah, so I guess looking at the EU, a topic that prior to the COVID pandemic was sort of the elephant in the room about any sort of UK policy discussion was this notion of Brexit. And we sort of finally reached a deal at the end of December last year, which will undoubtedly reduce the economic damage caused by Brexit. And given the cost of the pandemic is so great and sort of so overwhelming, how do you think the pandemic has influenced how we should view Brexit and how we should view the costs of Brexit? And do you think that will also influence how government responds to the sort of challenges posed by Brexit, given we have this such a profound economic change through the pandemic that seems to overwhelm the smaller trade problems?
Yes, that's in a way a political question more than an economic question. My argument was against doing what we've just done is that when you're already being hit by a pandemic, adding another shock is not economically very wise because it's clearly going to increase the total shock. But I think the government's view was, one, they were elected to do Brexit, and they want to get it over with. And one of the advantages, quote unquote, I stress, obviously they don't see it as an advantage, I'm not suggesting that, of the pandemic is that the losses associated with Brexit are much less visible because there's much less trade, and we're in any case, our economy is being hammered so terribly anyway. So it's a small point. I think that how is this going to unfold in future? So that's what's happened. We've done the Brexit. We've got a deal, pretty bad deal, but it was the least bad we could do given the constraints the British government had on what it wanted, the autonomy it sought. And the costs are at the moment less visible because of the huge costs of the pandemic. Now, if we look to the future, I think it's really hard. I mean, really, really hard to know how this is going to unfold. So, and I don't know, but there are two sort of big factors here. The first is what happens with the pandemic. Do we go back to normal, or what we think of as normal, soon or not? And, you know, if you asked me a month ago, I would have said the vaccines look great. We're going to roll them out across, at least across the West, pretty soon. The disease incidence will fall, death rates will tumble, and with testing as well, and no doubt improved treatments over time, the disease over the next couple of years will fade away. It's a serious factor, certainly in 3 years. Now, just 4 weeks later, we are worried that mutations will mean that it won't go away. We'll have worse mutations. Perhaps some of the mutations are really much worse. That hasn't happened so far. And vaccines will have to be tweaked, and getting back to normal is going to be much more difficult. I don't know how that's going to unfold. I mean, just because, among other, you don't know what the virus is going to do. We don't have much discussion with it, and we don't know how well we'll be able to respond. So the pandemic side has become suddenly very murky. So I have nightmares about this damn virus. So far, the new version seemed to make it more infectious, doesn't change its nature. And so far, thank God, it mainly kills old people, which is bad, but not that bad. But let's suppose one of the mutations was such that it started killing children and young people. The same incidence. Well, then we're in a completely different world. I mean, you know, parents are not going to have their children die. So who knows what's going to happen on the pandemic side. Now, the other side, we do our best, I suppose. We haven't done our best so far, but we're beginning to up our game, I feel. But will it be enough? The other side is the Brexit side. As all the experts will tell you, and will have told you, and I would have been one of them because I'm fairly knowledgeable on this stuff, this deal is just the beginning of a series of negotiations that are going to go on forever, because the EU will remain our biggest neighbor economically and our most important trading partner for a very long time, certainly the next generation. And we will want to improve our access on finance if we can, and we will want to get equivalence, and we will have a host of detailed things on endlessly on scientific cooperation and foodstuffs and what we want to do about foodstuffs, which has become a big problem, and they just go on and on and on and on. I hope that as all this calms down and the sort of, also, you know, the autonomy thing declines, we will be able to reach better agreements, which will facilitate trade. And of course, different governments might have different views, but I think we must assume that we will be in permanent negotiation with the EU on some issues, very much as Switzerland is, perhaps not as constantly, but sort of similarly. How will that interact then with the pandemic? Well, the simple truth is, so you've got a lot of uncertainties on one side, everything to do with the pandemic, another set of uncertainties about relationship with the EU, and we're going to have to live with them because the world is a very uncertain place.
Okay, thank you. So sticking, I guess, with the UK economy, but maybe changing track somewhat. So obviously, last week, the MPC announced their intention to create a plan for the imposition of negative interest rates here in the UK, but were, seeking to emphasise that this wasn't actually something that they were looking to do at the present moment? Obviously, you've spoken about the potential worries that what will happen if the virus mutates. Will this sort of economic crisis get worse? Are the vaccines, sufficiently reliable on that front for future mutations beyond sort of the current sort of UK, Brazil, South African variations we've already had? So, in short, my question would be, vis-a-vis negative interest rates, how likely a scenario do you see this as being? Obviously, that's quite a difficult one to answer, but maybe more importantly, whether you see value in the imposition of such a monetary policy were the current economic situation to worsen further.
Okay. How long have we got? So the answer is this: it's perfectly correct for the Bank of England to investigate properly all reasonable policy alternatives. And in fact, you can argue that after the financial crisis which is now 12 years ago or so, they sort of had to make it up as they went along, notably with the scale of QE they did. That's not quite right. I won't go back into the history of what we used to call open market operations, but it's sort of broadly right. But it's a good idea to have a plan. There are many ideas out there for what central banks can do if current monetary policy is not enough. And one of them, indeed, is negative interest rates. Another is so-called yield curve control, which is what the Japanese have gone for, which is basically to target long yields, not by buying assets, but by setting a yield target. And that looks like a very powerful policy. And the final one that I know of, there may well be others I don't know of, which has been recommended by a friend of mine, is negative spreads at the central bank. That is to say, the central bank lends at a rate to banks, to on-lend to their customers at a lower rate than what the banks receive on deposits. So this, if you like, is a transfer from the central bank to bank lending, a subsidy for bank lending. That's very controversial because it will mean the central bank consciously making a loss. But there's a very big debate among economists about whether you should care whether the central bank makes a loss or not. And if you take the view that it doesn't, you could do that. So there are lots of things, and they should be exploring all of them. Negative yields are sort of, in a way, the most obvious thing to do. Zero is just a number, as I'm sure you were taught when you were 7 or 8. -1 is just another number. So why not go to the negative numbers? Which would mean essentially that the banks would start charging depositors, presumably, if that were done, well, that's actually, even that isn't quite right. It depends on how the negative yields are constructed and how they affect commercial bank balance sheets. You can do them in such a way they don't have to pass them on to customers, but I think they're going to be more effective if they are passed on to customers, which means they pay a price for holding bank accounts and which ought to increase their willingness to spend. So they should look at this technically, how it would work. I think it's not incredibly difficult. The really difficult question is, how would it affect the people's behavior? If you started being charged 1 or 2% a year on your bank deposit, would it radically increase your willingness to spend? What would you spend on? Would you buy assets, which wouldn't be really what you want? Would you buy goods and services? And what would be the political reaction to being charged for holding money in a bank account? Because people are not used to paying for holding money in a bank account, particularly in the UK. I think all these things have to be looked at properly. Is it a policy that I would recommend? I think modestly negative yields are perfectly manageable and fine. If they become very large, then there's the question of whether people will try to flee bank accounts and go into cash. and how you would manage such an economy. Lots of fascinating questions. Nobody's got close to that yet, and I'm reasonably relaxed about it, but there are lots of fascinating questions, and that's exactly what the Bank of England should be looking at. Should they use it in current circumstances? In my view, clearly not. But you could imagine circumstances in which they might be appropriate. But my own guess, this is purely a guess, that as we come out of this crisis, we are more likely to see stronger inflationary pressure than more deflation, but who knows?
So one of the trends in the questions you've been sent in is sort of looking at how we move out of this pandemic. You sort of mentioned how hard it is to predict the future given sort of the constant mutations and the constant new variants and how that is forecasted into how we look at the future. But let's assuming sort of the best case scenario where the new South Africa variant or the Brazilian variant doesn't radically affect how the vaccine works. And by September, we're able to sort of achieve a degree of herd immunity. The government's sort of been borrowing throughout this last year at sort of wartime record levels. And how do you think the government moves forward given sort of massive levels of debt we faced? Do you think we'll see a sort of return to a far more austere fiscal policy in terms of reduced spending, higher taxes? Or do you think that's no longer politically possible for like the Conservative government and will instead see taxes remaining sort of stagnant or slightly higher, but spending also remaining high?
This is an issue that I touched upon in my column this week, if anybody's interested, and I even had some pretty charts on it. But the general point, by the way, is, of course, in no way unique to the United Kingdom. To a greater or less extent, every developed country faces the same question. Debt has been exploding, public debt has been exploding. How do they go back to normal? My view, broadly speaking, is as follows. As long as they borrow very long term, very long maturities, by the way, having their debt owned by the Bank of England is a version of that, though that's a controversial statement, but it's my view. They can manage this debt. The debt ratios, as you say, are very high and rising across the developed world as a whole, though not in Britain. Debt ratios, net debt to GDP, public debt to GDP is back to where it was in 1945. For Britain, it's still well under half of it. So by historical standards, Britain is not highly indebted. Our net public debt ratio is now still somewhat below, I don't think dramatic, but somewhat below its average of the last 250 years, which is a remarkable fact. So but as long as interest rates remain low, debt is very, very cheap. And so the sensible thing to do is to continue to borrow very long, thus hedging yourself against the risk of higher interest rates, and keep going. So I would, if I were, not only, I have written that the sensible thing to do is to continue to borrow, though presumably as the economy recovers, revenue recovers, that the scale of the deficits would shrink, and you certainly don't want necessarily to keep them at this enormous level, because people will start earning living again, and you won't have to pay people to stay at home and all the rest of it. So it should diminish. But there's no urgency about this fiscal adjustment. We can keep going for another couple of years, 2-3 years, I think, and accept the higher debt. It's awkward. But in the longer run, and we can just judge what longer run means, we can't accumulate debt forever. And I'm not a modern monetary theorist, so I don't believe we can accumulate monetize debt forever, though that's a complicated set of questions which I'm going to put to one side. So we have to close off the deficits at some point. And even from their point of view, we have to do so when we get inflationary excess demand. And so the question is, how do we do that? How do you close off the deficits and reduce them to possibly modest a balance, and then growth that slowly attenuates the debt levels, because we've got lots of other spending to come because of aging. We've got an aging economy, tough for you guys, but we've got an aging society, and we're going to end up spending on pensions and health and old age care and all this stuff. So my view is we will then have a strategic choice. Spending cuts or tax rises. Last time we had a crisis like this, which was after the financial crisis, about 85% of the fiscal adjustment was imposed on spending and about 15% on taxes. There are slightly different estimates, but the estimates I've seen from the OBR and the IFS are both in that range. I don't think it will be politically possible to do that again, particularly after this crisis, which has hit particularly badly the relatively poor. At the very least, it will have to be 50-50. I suspect it will be more, have to be sort of 2/3 tax rises and maybe 1/3 spending cuts in areas which don't affect the poor and middle classes too dramatically. Doing it will be a political nightmare for this government. Absolute nightmare, because one part of their coalition of support are basically the people who pay a large part of the tax, the relatively well off, and another part of their support are former Labour voters, really relatively badly off people who supported them over Brexit, and they need to keep that support if they want to retain their position. And if they squeeze spending for these people, even worse, squeeze spending and impose regressive tax increases like VAT, then I think they're going to be, it's politically nightmarish. So the strategic choice is going to be horrible. But I take the view that they're going to end up having to raise taxes on the relatively well-off, who've done relatively well, people like me. And I expect to pay higher taxes, and that's fine. But I'm afraid not all of us will feel that way.
Yeah, on that note, actually, a quick plug for a future event is we're actually having Randy Way, who's a modern monetary theorist, I think in 2 weeks' time.
Very good. Very good. Interesting person. He's written the best stuff on this, by far.
Yeah, I think Ben's going to finish off the sort of last fire question if you have time now.
Yes.
Yeah, so one other question that got submitted was about, obviously, the recent GameStop saga in the US, so Redditors versus Wall Street. I guess something that I might tag on to that is that what this sort of, as I at least see the saga, was it was facilitated to a significant extent by this so-called democratization of investing with sort of platforms like Robinhood, the app. So I guess my question off the back of that, generally, what your views on that sort of whole saga were, but also would you see this democratization of investing as a good thing, right? More power for retail investors, I guess, at the expense of hedge funds, or is it something that poses a great deal of risk to stock markets and internal economies more generally?
Well, so many aspects of this. It was political. It was fun. It's a nice story. It was politically, it had a sort of punch. If anybody else did what they did, which was sort of really trying to create a collusive, a system of collusion to damage particular players, it will probably be illegal. I'm pretty sure if the hedge funds got together to bash a company in quite that way, collusively, it would be probably illegal. But I don't really mind. Doesn't seem to be very important. So that's the first set of points. The second point, if you think there's a bubble, this would be sort of a classic symptom. There's always a point when stock markets froth and froth and froth and rise and rise and rise, when ordinary people who are not professionals, sort of say to themselves, I can make money in this game. I buy stocks, I can make money in this game. I become a day trader. There was a lot of day trading in the late 1990s. I thought that was the point at which it was clear that this was gone crazy, and they all disappeared afterwards. And what worries me is not at all the effect of this on the market. I think the effect on the market is nothing. It's completely unimportant from the marketing. What does worry me is an awful lot of people are going to lose their shirts. This is a very, very good way of losing your shirt. Because, say, in GameStop's case, it was pushed up to completely unsustainable, ludicrous levels. It then collapsed, and obviously lots of people bought it at the peak and will have lost lots and lots of money. And I'd rather people didn't do that. So, you know, people, ordinary people who don't, day trading, it's almost impossible to make money in day trading. Almost everybody loses. It's not a sensible way to invest, and far better to, you know, buy an index-linked fund. So it's very bad investing, and sad, but predictable. For the future of the stock market, I don't think this is going to be important, because the people doing this will never be big enough to move the dominant stocks in the market. This worked because they were dealing with a stock of really absolutely no significance. So I think of it as a symptom of our excesses, and but also it worries me, not because of what they're going to do to the markets. I don't really care about that, or to the hedge funds, because they're not going to do much anyway. But it worries me that a lot of perfectly nice young people, and perhaps older people, will feel this is an easy way to make money, and they will find out it isn't.
Okay, brilliant. So I think that's all we have time for. So from me and Oliver, thank you very much, Martin, for joining us. Really insightful discussion. I really enjoyed it. And then thank you everyone else for joining us. Just remember that you can access today's event if you missed any of it, and also all our past events via our YouTube page. So go and check that out for some really interesting talks. So once again, thank you for joining us, and thank you, Martin, for coming and talking to everyone today.
Real pleasure.